and welcome to Startup Street. I'm Arundhati Ramanan, and these are the top headlines from the startup world. NCLT tells Byju to respond to 2 separate insolvency petitions filed against the troubled Edtech firm by US lenders and the BCCI. The tribunal directs Byju to file its response to the plea filed by the GLA's Trust Company LLC to initiate the insolvency resolution procedure for hearing in April 2024. Daily Hunt is in advanced stages of talks to acquire homegrown microblogging platform Ku. As per a report by TechCrunch, the deal is expected to be finalized within weeks and involves a share swap agreement. Zeno Health, an omni-channel platform for quality and affordable generic medicines, raises $25 million in a Series C funding round led by Korean private equity investor Stick Investments. Existing investor Lightbox also participated in the round. Private equity or venture capital investments saw 11% decline year-on-year in 2023 due to the drop in overall deal activity. Number of deals dropped by 33%, according to an EY-IFCA joint report. Startup segment witnessed a substantial 42% decline in the number of deals. Apple, to halt its decade-long secretive efforts to build an electric car, reassigns the employees to AI-related projects. Tesla chief Elon Musk reacts to the developments with a saluting face emoji on X. IKEA's global CEO Jesper Brodin lays out an ambitious plan for the India operations over the next 10 years. Tells CNBC-TV18 that the Swedish furniture maker will finalize the next phase of its Indian investment before the end of 2022. Adds that the company is keen on ramping up exports from India, but wants the government to ensure India's quality standards are aligned to global benchmarks. Those were the headlines that we're tracking for you from the startup world. Now, the top story today: trouble for Byju continues to mount. The National Company Law Tribunal has issued a notice to the company in a plea filed by US-based lenders. The GLA's Trust, which represents nearly 100 US-based lenders, claimed that Byju's acted as a guarantor for its $1.2 billion loan to the company's US subsidiary. GLA's also said that Byju's has not responded to notices sent to the company. Speaking to CNBC-TV18, Edtech startups Upgrad and PhysicsWala have said that the Byju's crisis does not define the whole ecosystem and that it has had a mixed impact on the industry. Take a look.
One company does not define the ecosystem. There were many things that did not go out well with that one organization, but that should not mean that the entire ecosystem is painted under the same brush. Having said that, in today's sort of context, will there be an impact of the poster child? Yes, of course. But as an organization, we are not bothered about that. We are bothered about what we are working on, what we are building right now.
It has a mixed impact on industry, so Byju being the leader of the industry for a good amount of time, and they have some tough time right now, so that will create some perception in the VC world or LP world. And there are companies, and there are good times, there are bad times. I wish them they recover from the current crisis and come back stronger.
And the other big international story today: tech giant Apple is winding up its electric vehicles project called Titan after 10 years of investment and experimentation. This puts a stop to the company's efforts of building a car that competes with Tesla and other EV makers. Elon Musk reacted to the developments with a saluting face emoji on social media platform X. The decade-long program employed nearly 2,000 employees, and many of them will now transition to the company's AI division. The exact number of layoffs following the decision remains uncertain. Project Titan was an ambitious project that began in 2014, working to develop a fully automated EV. However, it faced several leadership challenges. Moreover, Apple's decision comes at a time when there is an overall lull in the EV market, with sales slowing down due to higher prices after reduced subsidies, a lack of charging infrastructure, and hidden costs of EVs related to damage and collision. Major automakers, including General Motors, Tesla, Renault, and Ford, have also scaled back on their EV push and slashed production targets. The companies will be focusing more on production of hybrid vehicles in the near term. Bhavish Agarwal-led Krutrim AI chatbot has gone viral after users spam social media with screenshots depicting that the chatbot provides inaccurate responses to their inquiries. CNBC-TV18's Aishwarya Anand decided to test out the argument for us. Take a look.
Krutrim, an AI startup launched by Ola founder Bhavish Agarwal, rolled out an AI chatbot for public beta testing on February 26th. This AI chatbot, the first product launched by the company, is touted to be powered by its multilingual large language models. It claims to work like OpenAI's ChatGPT and Google's Gemini, formerly known as Bard. However, the homegrown AI chatbot has been facing criticism from users after its beta launch for not being properly trained. From general queries to translation, mathematical problems to logical reasoning, the chatbot is producing inaccurate results. So we decided to test it out for ourselves. When we asked the chatbot who won the Cricket World Cup in 1983, it confidently replied, "The West Indies team won the Cricket World Cup in 1983. This answer was incorrect. The World Cup was famously won by the Kapil-Dev-led Team India that year. Google's Gemini and ChatGPT, however, provided the correct answer. Cricket wasn't the only topic where Krutrim floundered. It erroneously informed us that Hillary Clinton became the US president by defeating Donald Trump in 2014. The chatbot also struggled to answer basic questions like today's date, who formed the government in India in 2014, who killed Mahatma Gandhi, and who was India's first woman prime minister. When quizzed about India's first billion-dollar startup, the bot claimed that its parent company, Krutrim, is the first unicorn of the Indian startup ecosystem. Well, full marks for confidence and 0 on fact check. InMobi was India's first billion-dollar startup. The series of gaffes by Krutrim AI have also sparked questions about its model, especially considering the significant investment in the startup. Krutrim became India's first unicorn of 2024 after raising $50 million from Matrix Partners India, an early backer of Agrawal's other ventures, Ola Cabs, and the IPO-bound Ola Electric. This is Aishwarya Anand for CNBC-TV18.
Venture capitalists will be half lying if they considered value over valuation. That's the word coming in from Karthik Reddy, the CEO of Blume Ventures. Speaking to my colleague Rachna Dhanrajani at the IVCA Conclave 2024, he said that venture capital firms should have the right size of fund in their strategy. He also added that India should bet big on the fintech space to achieve the $10 trillion economy mark. Here's a slice of that conversation.
I'd like to start by asking, you're one of the few people who's seen the startup ecosystem start, evolve, and sort of witness it where it has reached now from the inside and pretty much shaped it. How has your experience been like, and how have you seen these trends evolve?
So yeah, 13 years when we started, there was, it was a very thin venture ecosystem. Private equity is more stable, so it doesn't grow as rapidly. Large amounts of capital. Tends to be typically global players and some Indian players, but basically evolves gradually. And you can see there's a concentration of some phenomenal players that have emerged there. Venture is constantly evolving. One, because early stage is generally small funds. We start very small. We started at 20 million, now we're 290 million in Fund 4. So that's like 11, 12x expansion. Actually, in rupee terms, it's a 20x expansion in fund size. To be able to see that kind of track record, establish it, see success stories, takes a decade. And then it just requires a lot of stamina, much like a founder journey. So the equivalent of getting to Fund 4 or 5 in our business is like taking a company public, right? And then the journey doesn't stop. It keeps going on. So for most of your viewers or my peers who are trying to set up funds or mimic what we did in Blume in 2011, the biggest warning is right size a fund for your strategy. Too much money and you'll have terrible returns, right? And I think that was our secret sauce in some sense.
We recently saw, we've been through a funding winter. 2024 is the year of comeback, where we're seeing founders being hopeful, VCs being hopeful, private equity being hopeful. What is your take on it in terms of monetary value of this year?
I think any venture person will be half lying if we say we looked only at value over valuation. I think that's more a recent trend. All of us were greedy for valuation, but you know that it has a limited timestamp on it because eventually you have to make money for your investors, for which you have to be able to sell at that valuation. So the selling price is the valuation. So unbeknownst to most of you, a lot of our industry's portfolio, the stars in the portfolio, are significantly marked down to conservative values today, which is reflective of if they went public tomorrow or if they raise money or if they had to get it through an M&A, what would the price tag on these assets be? Right? So maybe half of them are holding up the valuation, the other half are marked down, right? So one is, I think we've all adjusted to how to value companies better at this juncture. So going forward, once that correction happens, it's not happened fully, that's what I was trying to tell you. So once that correction happens, then everybody recalibrates to saying, oh, now we've found value to be at par, adjusted for risk. My belief, and has been for 5 years, but finally loving the fact that it's happening in real time, is more companies going to the public markets and seeing how they discover their real price. And when that happens, a lot more money gushes in, is my take.
You recently had your fourth fund. What has been the allocation for that fund? Where is that money flowing in? And what are the sectors that you're betting on now?
Yeah. So I think Blume's, again, good or bad, it's our first principles thinking that India is a diverse tech market. When you raise a $250+ million fund, you can't start concentrating massively on one or two sectors. It's too risky. Please remember that our primary bets in every fund cycle are made within 3 years. So you don't get vintage diversification across 5-6 years. You get them over 3 years. So you can't like suddenly say, oh, I'll bet, and this some US funds have done. There's this legacy story of Kleiner Perkins betting on climate and that fund blowing up because they went all in on climate. So yes, climate's hot, but would I bet half the fund on climate? No. I would bet like 20%. If that was my budget, I would go to 25 because it's looking extra good. Maybe stretch 28, 30, but I won't go beyond that. So basically, we look at risk in four different sectoral buckets. One is software and related, like where AI, enterprise software, SaaS, dev tools, selling for the world. That's one bucket. The other is electric vehicles, climate, deep tech, includes life science and healthcare, second bucket. Third is Fintech, because we believe if India has to become a $10 trillion economy, it will ride on the back of financial services as the first pit stop, because the money starts there. And the fourth is domestic consumption and SMB enablement. And that could be commerce, that could be education, that could be health, it could be all of those elements inside of India, right? So these are the four buckets. And the way our partnership works is we basically, each partner focuses on one of these buckets and tries to win big. So eventually I would love to be able to say that the person who was managing software was amongst the best, performers of this vintage. The one performing on EVs was one of the best performers of this vintage, etc. So nobody has slack. Everybody has to outperform. At least that's the starting premise. We'll see how it plays out. But we've gotten more and more rigid about this structure. And when you have a $200+ million structure, you better think about this.
On that note, it is time for us to head into a short break. But coming up next, we speak about funding. Venture debt investments is the big theme this year. We tell you why Indian startup founders are opting for venture debt funding. We also take a look at how Indian startups driving climate action are the top picks of venture capital investors. More on that when we come back. Stay tuned. Welcome back. You're still with us on Startup Street. Venture debt investments in Indian startups has surged despite the ongoing funding winter. From just about $100 million in annual investments in 2018, venture debt funding crossed the $1 billion mark for the first time in 2023, as per a Stride Venture report. Why is venture debt finding favor with Indian startup founders? Akhil Vishwanath caught up with the firm's managing partner, Apurva Sharma, to find out. Take a look.
LPs have become more comfortable understanding this asset class, putting money. The VC investors, the founders have become more comfortable taking it. So that, I think, has been a very big reason. Venture debt as a percentage of venture capital was very underpenetrated in India. It was, say, less than 3% 2-3 years back. It is about 17 to 20% in very mature markets like the US. And the growth is practically a result of education, of the fact that it was underpenetrated, and now it has grown because it was a very small base and hence it has grown very swiftly. Both of these reasons are there. Funding winter has, of course, nudged the founders to think of venture debt, because in 2021, founders had this perception that since they were raising equity rounds back to back within 6 months, equity was cheap, equity was available. So people were not thinking of alternate sources of financing, even for the right reasons.
The funding winter has certainly nudged founders to look at venture debt, and especially those in consumer products and Fintech, because they dominated most of the venture debt investments in 2023. But do you see the scope of venture debt extending beyond some of these sectors and enter newer sectors? And what would you say some of the sectors that would be in focus for venture debt investors in 2024?
Great. So consumer and financial services, even B2B for that matter, are sectors which have real debt use cases. Going forward in 2024, we feel EV as a sector is going to be one of the biggest sectors users of venture debt as an asset class. And the reason for that is these are capex intensive. This is a capex intensive sector. If you look at the entire value chain, whether it's battery swapping, battery recycling, OEMs, or ride-hailing operators, all of them have some kind of capex needs.
Growth stage companies have tended to corner most of the funds, and especially 60% in 2023. And that's also because because of the funding winter, they haven't been able to have access to equity financing. Do you see the trend continuing this year, especially with several late-stage companies as well looking at newer debt instruments such as convertible debt?
Yes. So, if you look at the allocation of venture debt, the maximum number of deals happened in Series A and Series B companies. So that took up the maximum number of deals. But of course, in terms of value, Series C and beyond would have amassed close to 47-48%. And yes, across the ecosystem, people have understood that equity is, expensive, and people have resorted to optionally convertible debentures, compulsorily convertible debentures, because they haven't been able to find out a price, at which all investors are comfortable investing in. So some of them have procrastinated that discussion to later. So, these are discounted rounds that, it'll convert at a certain point in time in future or basis a certain milestone. And right now they are bridging it with a OCD or a CCD kind of structure.
Got it. When it comes to Stride Ventures portfolio, you've backed about 140 startups so far, from 3 funds, and you announced the first close of the latest fund at $100 million last year. When can we expect the close of the fund?
Actually, pretty soon. We are thinking of announcing the final close for our 3rd fund in about a month from now. So pretty soon we should be done with the fund 3.
You were targeting a corpus of about $200 million. Are you sticking with that target? And how many startups do you intend on backing in 2024?
So it'll be between 150 to 200 million. We'll see where we land at. In terms of number of companies, probably 40 to 50 new companies that we intend to invest in 2024.
Well, breaking news coming in there with about